From taxes to trade deals, is Africa finally taking control of its economic narrative or is still dancing to someone else's tune? Good morning and welcome to another power-packed episode of Business Week. It's been a week of deals, departures, and development dreams. First, Ghana clinched a $2.8 million debt relief pact, and Egypt secured $1 billion in bonds from Kuwait's biggest bank, and Nigeria's Dangote refinery is eyeing the 2026 stock market debut, just as the government recapitalizes the Bank of Agriculture with 1.5 trillion naira in a bold food security push. Meanwhile, Nigeria's president signs 4 tax bills into law in a major fiscal reform drive, and Amazon is betting big on Britain with a £40 billion investment commitment. And at the 32nd Afrexim Bank annual meetings right here in Abuja, we witnessed a moment of history as President Tinubu surprised outgoing Afrexim chief Benedict Orama with one of the country's highest honors, the GCON, marking the end of a decade of transformational leadership. So if you blinked and missed the headlines during the week, don't worry. I'm Rolake Akinwe-Filani, and I'm here to help you catch up. Let's begin with a look at how the markets performed this week. Of course, I'd like to start with global energy commodities week-on-week performance as at Friday, the 27th of June. Well, oil prices rose on Friday, but were set for their steepest weekly decline since March 2023 as the absence of significant supply disruptions from the Iran-Israel conflict saw any risk premiums evaporate. And what else do we have? Brent crude was down by 11.85% on a weekly basis to $67.06 a barrel, while WTI North American grade was at $65.18 a barrel, down by 4.06% from the previous week. Well, natural gas was also down 5.37% week on week, and gasoline, of course, retreated following Brent and WTI by 10.39%. Let's scoot over now to equity markets, starting, of course, here at home with the Nigeria Stock Exchange. At the end of the last weekday of trading, a total of 625.78 million shares in 21,800 deals, corresponding to a market value of 12.7 billion naira, were traded. Let's compare that to last Friday's NGX trading day. Yesterday's data actually showed a 19.7% increase in volume and a 23.12% uptake in deals. The current market cap of the NSE NGX is 75.96 trillion naira, gradually creeping up to 80 trillion naira there. Scooting over to the rest of the continent, Africa. Starting, of course, with South Africa, Joburg closed at 95,862.31, marking a rise of 1.2% from the previous week. In Accra, there's also some positive movement, with the index rising on a weekly basis by 0.62%, and closing in Nairobi. Nairobi Stock Exchange closed upward. Let's move up by 4.65%, with the index ending at 152.45. The Massy Moroccan Casablanca index closed up by 2.88% on a weekly basis. Now for European markets. Stock markets rose on the last day of trading. The European stocks 600 closed up by 1.29% week on week, moving up fast, quickly there, thank you. German DAX index closed up again by 2.89%. France's CAC was up by 1.34%. And IBEX in Spain, at a value of 13,969, was up by 0.86%. Now to my favorite part of the markets, my top picks for the week. Lots of interesting news here. Of course, let's start with Ghana. Ghana has secured a $2.8 billion debt deal with creditors, major creditors, countries like China, France, Germany, the UK, and others. It's part of this IMF bailout program that Ghana has been pursuing since 2022, when it had to restructure almost $30 billion worth of debt. Interestingly, this deal actually suspends payments through to 2026. So essentially, Ghana is not starting repayments on that debt until 2039. So obligations have been pushed out by about 15 years. And the Ghanaian government was actually able to secure interest rates that were between 1.3%. That's really a major boost for giving Ghana some level of fiscal space. Now, the finance minister has said that the country is still in talks with private creditors on another $2.7 billion worth of debt or thereabouts. Well, that's Ghana. Let's move on to another interesting conversation here, and that is the U.S. launching talks with the DRC, the government of Felix Tshisekedi, on mining and extracting rare earth minerals from the DRC. Now, interestingly, this sounds like a resources for peace deal, because the U.S. has essentially brokered a peace deal between Rwanda and the DRC Congo in exchange for a Texan mogul businessman, an ally of Trump, to work alongside global trader Mercuria to mine rare earths from the DRC Congo in the Rubaya coltan mine, actually, which is one of the biggest coltan mines in the world. And of course, that part of the eastern DRC region has actually faced some unrest and conflict from M23 rebels, allegedly sponsored by the Rwandan authorities. But of course, the peace deal has been brokered between the DRC and Rwanda by the Trump administration. Let's see what else is in my top picks from the week. Of course, China and the US seem to have reached some sort of truce around their trade talks. Pretty much for the whole of June, the Chinese government of Xi Jinping and the Trump administration have been locked in tit-for-tat tariffs conversations, with the US government now saying that China has to give access to the US market for rare earth exports from China to the US, and in return, the US will back down on its tariff imposition on the Chinese government. And in fact, the US has also said that it will then ease restrictions, visa restrictions on Chinese students. So is this the start of a long-term softening of the relationship, the economic tensions between China and the US? In some respects, I want to say don't hold your breath. In another respects, perhaps the markets will get some reprieve around trade and tariff tensions. What else do we have from my top picks for the week? Tinubu, the Nigerian president, has signed 4 tax bills into law. Now, this is a landmark move because for the first time, Nigeria is unifying all its tax laws into a single tax bill. We're seeing consolidation of tax regulation and legislation affecting different sectors. Interestingly, VAT has been kept at 7.5% instead of the earlier proposed 12.5%. But a key development here is that VAT concessions have been made for companies earning below a certain income threshold. So this is really good news from a fiscal health space for the Nigerian economy. And of course, what else do we have? Egypt, yes, Egypt and the Sukuk bond that it had raised from the Kuwaiti finance house. Of course, this is a major boon for the Egyptian economy, which in the last few years has been facing quite a few economic headwinds. That's it for my top picks from around the world. Now for some other top stories from around the world. Amazon will invest £40 billion in the UK over the next 3 years, the e-commerce titan announced on Tuesday. The company said it plans to spend the money on building 4 new fulfillment centers, large warehouses where it prepares orders for delivery, as well as upgrades and expansions to its existing operations across the country. The announcement was chaired by the British government, of course, which has been courting investments from major tech players of late as it looks to boost domestic growth and productivity. Saudi Arabia's revenue from oil exports slumped to the lowest in almost 4 years in April as crude prices crashed. Proceeds from the sale of crude oil and refined products declined to $16.5 billion, according to data released from the country's main statistics body. That's down about 21% year on year and 7% from the prior month. Still on oil, global energy giant Total Energies will restart work on its $20 billion LNG gas project in Mozambique, aiming to begin production by 2029 after improved security conditions allowed a return to the insurgency-hit region. CEO Patrick Pouyanné has confirmed this. He also said that the giant holds a 26.5% stake in the Mozambique LNG project, and he said he's now confident that security in the region has stabilized sufficiently to move the project forward. South Africa's President Cyril Ramaphosa has fired a senior member of the Democratic Alliance Party as Deputy Trade Minister, causing friction with the party's main coalition partner. Ramaphosa's African National Congress and the Democratic Alliance have clashed over this year's budget and policies to address racial inequality, but the multi-party government was formed after a steep drop in ANC support at last year's election. The president's office did not give a reason why Andrew Whitfield had been removed as one of two deputy ministers for trade, industry and competition, but said no wholesale cabinet reshuffle was planned. On the sidelines of the Afrexim annual meetings, Aliko Dangote, president of the Dangote Group, plans a listing, or is talked about planning a listing for his Nigerian crude oil refinery by the end of next year to widen the company's investor base. And this is quite an interesting development because the billionaire also plans to list the group's urea plant, which has a capacity to produce 2.8 million tons of the crop nutrient per annum. Dangote told the Afrexim Bank annual meetings in Abuja that the oil facility can process 650,000 barrels of crude, making it the continent's biggest refinery and the world's largest single-train refinery. A listing through an initial public offering could help woo investors, including state-owned pension funds. Still on Nigeria, Egypt, Nigeria, Morocco have been listed as the highest recipients of the $95 billion in remittance flows into the African continent in 2024. This was revealed in the State of Africa Infrastructure Report published by the Africa Finance Corporation, AFC. The report says that in 2024, Africa received over $95 billion in remittance from its global diaspora, an amount roughly equivalent to total FDI inflows into the continent that year. And the largest recipients were Egypt, Nigeria, Morocco, followed by a growing number of mid-sized economies with substantial immigrant populations. President Bola Tinubu of Nigeria in Abuja has handed over the chairmanship of the ECOWAS Authority of Heads of States and Government to President Julius Maada Bio of Sierra Leone. Tinubu ended his two-year tenure at the ECOWAS Authority's 67th ordinary session by symbolically handing over the emblem to the incoming chair. He expressed confidence in the region's continued path towards peace, stability and prosperity, describing his tenure as a profound honor and privilege to have led the esteemed body. He led that body since 2023. The president also said he remained deeply humbled by the trust and support extended to him throughout his tenure.
Faster security.
Ethiopia's central bank has said international banks and investors can now apply for licenses to operate in the country. This marks a major milestone in the government's reform agenda, which is aimed at boosting foreign investment. The move follows the passage of a long-awaited law in December allowing foreign banks to establish branches or invest in local institutions. Ownership stakes will be capped at 40% for strategic foreign investors. Ethiopia is also pursuing broader economic reforms, including a $3.4 billion IMF agreement and efforts to restructure $8.4 billion in debt. The country's banking sector is currently led by the state-owned Commercial Bank of Ethiopia. Well, I was in Abuja during the week, and there were a few other key takeaways from the Afrexim Bank annual meetings. First, I listened to AFC President Samalai Zubaru, who said that Africa has over $1 trillion of domestic capital, and over $1 trillion of those are non-banking assets. And he was talking about ways in which to mobilize local sources of capital. He also cited the over $150 billion of sovereign wealth funds on the continent, as well as more than $450 billion in African pension funds. And his key message was about the need for Africa to take ownership of its development, as well as lead in the execution of that development. He also, of course, mentioned the fact that the AU Development Fund, which is being proposed, is going to be critical in bridging critical infrastructure gaps. And he mentioned that the Africa Development Bank will likely be one of the newest members of the Alliance of African Multilateral Finance Institutions, of which he is chair, the alliance called AMFI. I also got to hear from the former CEO of EcoBank Transnational Incorporated, Mr. Arnold Ekpe, and who mentioned the need to ease visa and travel restrictions for African professionals and people across the continent's 55 borders, saying that if you want capital to travel, it travels with people. The Alliance for African Multilateral Financial Institutions had talked about the fact that African multilateral finance institutions are capitalized at only $70 billion today, and that there was a need to grow this further. And of course, we heard from a statesman, former President Olusegun Obasanjo, in a fireside chat. He mentioned that Africa has relied too long on aid when asked a question about the current US pullback in aid and the fact that Africa really needs to look within to advance its development. He also highlighted the issue of waste and corruption, which he said, and we quote, are strange bedfellows of development. And finally, we heard from renowned economist, American economist and professor of Columbia Business School, Professor Jeffrey Sachs, who emphasized the fact that investment in education was a major part of China's success and a core part of India's strategic economic success. He also highlighted the need for investment in infrastructure, electricity, digital access, and transport, as well as investment in the private economy and industrial policy, of course, drawing comparisons with China and the fact that China really started a new focus on this industrialization on the basis of a made in China policy from 2020 that has lasted till 2025. And also cited the fact that the poorest regions of the world have the highest growth potential of the world, crowning what was a very interesting, insightful, and memorable week at the Afrexim Bank annual meetings, the 32nd Afrexim Bank annual meeting.